Parcel shipping costs continue to rise, and consumers are getting tired of packaging waste. What if you could solve both problems at the same time? I'm James Malley, CEO and co-founder at Pacurate. Our packing intelligence platform helps you determine your ideal mix of box sizes and gives you complete control over how they're packed in real time, so you can minimize costs, delight your customers, and ship sustainably. Learn more at pacurate.io.
Give them what they want. Welcome to Freightonomic's new look at the desk. If you've been watching FreightWaves now, you'll know we're not the only ones with Sonar guys. Actually, they looked good yesterday at the desk, so I was like, why not? Let's give it a shot. I'm Zach Strickland, head of Freight Market Intelligence. With me, as always, Anthony Smith, chief economist here at FreightWaves. Thanks for tuning in today or listening whenever you're listening, if you're listening on the podcast side.
However you're consuming it.
Yeah. Tell us what you think of the show. Tell us what you think of, our new look setup here. As we're, the customer's always right.
Yeah.
And a matter of taste is the rest of that statement. That's not
often left off.
Often left off, second part of the equation in matters of taste, which means that give them what they want to buy.
Exactly. Also, I'm going to be listening in to see what you guys want to hear and what you guys are all talking about, because we are streaming live right now on LinkedIn, also on YouTube. So I will be looking down from time to time to also have my numbers right, but also be watching the stream. So if you want to join the show, be a part of the show, you have some insight, what you're seeing, some trends, anything, questions like that, join in, be a part of the show as well.
Also, we got a sponsor. We got two sponsors.
We're out here.
We're out there. Got to give some love to our sponsors. Thanks to Pacurate and Cubiscan. Pacurate, no more fighting with spreadsheets. PacSimulate harnesses the power of Pacurate's patented cartonization algorithm. Say that 3 times. So you can simulate millions of parcel shipments and identify your ideal carton mix. Learn more at pacurate.io.
Pacurate, we appreciate you.
Yeah, we definitely do. And obviously, we love the technology and the efficiency that is gained from said technology here at FreightWaves. So always nice to see, especially things like this. I was an LTL.
Yeah.
So there's a lot of inefficiency in jumbling around all the different parcels and packages. And of course, I'm not talking about parcel as LTL, but lots of, when you break up a truck, there's all sorts of moving parts. People don't understand. I always tell people, when you go from truckload to LTL and subsequently into parcel, it's like going from basic math to calculus.
Yes, I got a little bit of a glimpse of that when I was able to go to the Final Mile Forum and kind of see some of that final mile aspect of everything. And it's just the complications and really all the intricacies that go into that, just like the route planning, it gets messy.
Yeah, and anytime you can gain efficiency from technology in that space, parcel and LTL, I think it's probably one of the least served sitting out there right now, my opinion. Take it or leave it.
I'm with it. But Zach, we have to get things kicked off here, and we also have to talk about, of course, the market, the updates. And so if anyone is just now tuning in and, you know what, maybe you don't have all day, all afternoon, you don't have 30 minutes, you just have 2 minutes, Zach, you might be their man.
I feel like this is why I do it.
You do it for the people like this. So Zach,
for the people.
I'm going to count you in for the market in 2. Are you ready?
Let's do it.
And 3, 2, 1, go.
All right, let's lead things off with our OTVI, taking the traditional holiday dip there, but big takeaways whenever we're looking at the OTVI, the count of or the index that based on the count of tenders going from shipper to carrier requesting contracted freight capacity. I'm looking at the trends, and the trend for this one continues to be upwards. We see the OTVI in white for the current year, and that is still moving higher. We're over 2019 there in the purple, significantly higher than that, by the way. And then we're starting to kind of get closer to last year's values. Now, this is not necessarily the best news because last year we were in a deterioration cycle. This year we're in an upswing, and this demand pattern is persistent. This is more seasonal when we're looking at September, but it's been upward moving since June, Anthony. So, when I'm looking at this, volumes from August being higher than June, not necessarily something we typically see. Let's go to the next one here. Look at what it's doing to capacity. Not a whole lot, but tender rejection rates are moving higher or have moved higher. They've come down a little bit over the last couple of days, as you would expect after the Labor Day holiday peak, starting to move a little bit lower. And spot rates, excluding fuel costs, they're in green, ticking higher, but not substantially. So a lot of this freight is not falling into the spot market just yet, or there's just not a significant amount of upward pressure, as 4.2% rejection rates are still not very high, historically speaking. They're just higher than they have been. And again, that peak being higher than July 4th, absolutely a critical component here to suggest that things are starting to tighten underlying all this abundant capacity. Moving into the next chart, looking at VOTRI, FOTRI, and ROTRI, we can see the refrigerated rejection rates starting to come back down after that Labor Day peak. Flatbed rejection rates starting to tick back up. But the refrigerated inflection point here might be kind of a canary in the coal mine.
Ding, ding. So, Zach, let's talk about that ROTRI, that refrigerated.
Yeah.
What are some of your initial thoughts around that?
The fact that ROTRI is, and that was the one in blue on our previous chart here, if we want to pull that back up, the fact that ROTRI was trending higher pretty steadily. Now, again, flatbed's going to be less dense.
Yeah.
It's only about a 5 to 10% representation in the total tender data that we have. So that makes it very volatile when you're looking at it. But it does line up really well with the spot market rate trends. Overall, flatbed rates have been higher for flatbed than refrigerated and van combined. But, refrigerated is suggesting, and especially the way that it's kind of separating itself there from the van side, that's, refrigerated capacity is less so than dry van. That's like your general ubiquitous commodity, transportation commodity out there. Refrigerator represents about 15 to 20% of the total truckload market. So the fact that it's been so close, we've seen that situation be so close, those two lines be so close for the last several months, that's weird.
Yeah.
So the fact they're starting to separate and refrigerated capacity is getting tighter, even though it's not dramatic outside of that spike around Labor Day, I think that may be a sign that just like the rejection rates spiking up over July 4th levels, it's a sign that things are moving that direction, and it's not getting worse for carriers, even though it's going to feel not a lot different.
Yeah. One of the ones that I think was interesting, of course, in my biased opinion, of course, going to be VOTRI. Is that it's starting to see a little bit of a resurgence once again. And I don't think it comes as too much of a surprise. I think, of course, thinking about flatbed, there's a few different things that go into it. Of course, construction is going to be a big one, and manufacturing is also going to be another segment. And I think we've seen, of course, some weakness in manufacturing, not always all the way across the entire spectrum. So, of course, look at the ISM PMI, there's weakness, there's contraction there for months on top of months. But also you look at something like industrial production, it's an indexed report, not measured in millions of dollars like some of the other durable goods reports are. It's showing that there are some segments that are doing better than others, so like automotive outpacing some parts of machinery, things like that. But really, the big driver, I think, is going to be for some aspects of residential construction. So housing starts can kind of be somewhat volatile, especially when looking at multifam. Big thing is, of course, there's such little inventory for existing homes that there's propping up a lot of new homes. And some of the other subcomponents that don't really get highlighted within the Census Bureau report for housing and construction is going to be homes still under construction, which is still near record highs, or homes that have been authorized but not yet started. So this goes beyond permits that, okay, you've been approved, but you haven't started just yet. So there's a backlog of homes that have not really been just implemented on breaking ground just yet. Yeah,
I think it's interesting because the macroeconomic indicators in my mind, and correct me if I'm misreading, largely are still presenting we're heading towards contraction in the economy, like kind of a recessionary feel to them. We just had the jobs report. I think things deteriorated in the jobs market as you're expecting, right?
Yeah, so we saw a tick up in the unemployment rate. We saw job openings come down. One of the ones that didn't get the memo was initial jobless claims, which just got updated this morning, showing that there was a drop below 220 initial jobs claims, now down to, let's see here, 216,000. So initial jobs claims didn't get the memo at all, but other measures, so like we saw weakness in payrolls added from the ADP report, things like that. So we're starting to see some weakness there.
But unemployment went up to 3.8%, which was a significant jump, right?
That was a pretty significant jump, especially because, there was this expectation that there was going to be around 3.5 or so. But yeah, 3.8, pretty significant jump. Still this overwhelming demand for leisure and hospitality. Even seen in the latest ISM services measure, which measures instead of the ISM manufacturing, which measures manufacturing, the service would measure, as it would kind of hint to, services. That shows still growth and expansion, especially with leisure and hospitality. It's like this last hurrah that a lot of people are taking summer trips, Zach. That might be going.
Summer's over. Labor Day and
exactly. Last hurrah, I guess kids are back to school as well too. So consumers are still spending on services. I think they will continue to spend on services even as we get into some of the winter months as well.
Yeah, I don't like the consumer conditions right now, but we are seeing this resilience in the freight market. You saw the OTVI. We're seeing things look like they're getting tighter, and that in my mind is more of a sign. This feels like kind of a one-off to me, and one of the reasons is I believe that we're seeing a little bit of kind of pull forward. Now that the maritime sector is opened up a little bit more, I think shippers are starting to say, okay, we got our inventories down. We're going to have a little bit of freight just in case, have a little bit of that old school mentality from 2 years ago, pull some of this freight in. We might have gotten our inventories down a little bit lower than we wanted to, but we want to make sure that if we do have a resilient consumer environment in Q4, we pull some of this freight forward. And one of the biggest markets that is being impacted here on this is the Ontario, California market. If we want to pull up that chart right there, the one where we're looking at outbound tender rejection index values for the Ontario market and long haul outbound tender rejection index values for the Ontario market. And this market is like Inland Empire, very warehouse centric, one of the largest ones in the United States. And the fact that capacity's tightened out here because demand has been growing out of this area over the last several months, we're seeing this is a replenishment heavy area. So a lot of long haul freight comes out of Southern California and it goes into the fulfillment centers on the East Coast.
Yeah.
Or it gets staged in the middle of the country in Dallas, for instance. And the fact that we're seeing capacity and that 8% number is significant. That is well above the national average of 4.2%. So this is the market to watch moving forward because that's going to tell us whether or not we have a sustainable increase in demand or whether or not we're still seeing this pull forward.
And speaking of that demand, of course, before it comes to the U.S., as to go through the oceans and kind of transitioning here into our newsonomics, we also have to talk to one of the latest articles from the great Henry Byers that just got released not too long ago.
This article was phenomenal. Anytime, obviously, Henry Byers writes something, you need to read it. He has one of the best, especially even if you're not involved in ocean, like a lot of good forward-looking data in our ocean data here, and I want to highlight some of that in this article. So, ocean carriers record rejections, last-ditch effort to bolster spot rates. So there's some noise here.
Yeah,
it's not like the truckload market. Ocean carriers have a little bit more control of their capacity. And the first data point I want to pull up here, because I think this one's probably one of the more relevant, is the bookings. Tony Mulvey and I talked about this one this morning. This is counting the number of requests from importers to providers with about an 8 to 11 day lead time on whether or not they're going to get a shipment into the United States, a BOL. Yeah. And you can see there's a downtick here. We had a little bit of an upward swing, and now it's starting to move lower. We peaked out around August 1st. And we've seen the volumes come in. They've been coming in. This is a 13-day lead time into the West Coast.
Right.
Actually, it's longer than that. It's about a 20-day lead time into the West Coast when you're looking at bookings. And this is telling us that what I just said was right. We got a little bit of a one-off situation, some influx of freight coming in sooner than we expected.
And it's interesting because, of course, a lot of what's happened over the past few years is going to be fresh on a lot of people's minds. Of course, bullwhip effects, oversupply inventory, whittling that inventory down, then having just in case instead of just in time, now just in time, just in case. So there's just so many factors to really kind of go through. But what Henry is saying here is almost kind of making sense as well, with a lot of the sentiment being sent out by a lot of big shippers with expectations and downgrading expectations, except for maybe Walmart, of what to expect and from their results in the latter parts of this year.
Yeah, and I think, you have to really read this article. Please, everyone should read this article. This is one of the best things to kind of navigate what we're seeing. So ocean rejection rates, not necessarily exactly the same thing as a tender rejection rate, but it's similar in the way that, carriers are rejecting, they're saying we're not going to carry the freight. And you can see they're spiking in this next chart that we're going to pull up here. So ocean rejection rates jumping up above 10% for the first time in a long, long time. And then I want to follow this up. Like, why would, demand increased, Zach, except it's not increasing right now. It actually is going down. And rejection rates spiking with demand doesn't make sense, except this next chart here really pulls it together and says, here's this vessel capacity of ships moving through and picking up this freight. You can see it's going down.
Yeah.
The capacity's coming offline. They're blank sailing. They're controlling capacity. This is something the truckload market cannot do.
So that was going to be the next question. The rejection rates, when we're looking at TEUs, does that equal like the same thing when we're looking at a rejection rate for a truckload? Does it mean like essentially the same thing, or can you come to the same conclusion?
It's similar, but not exactly.
Yeah.
They don't operate the exact same way. Blank sailings, like I said, they can control capacity a little bit more so than the fragmented domestic truckload market. So what Henry's premise is that they're doing this to keep spot rates elevated so that they can capture that revenue because they foresee a dramatic downturn in import demand.
That's a big one. It's almost like would you use the C word? Almost like a cartel.
It feels that way, but I mean, if domestic carriers could do this,
yeah, they would.
They would.
Yeah, I think it's a smart business decision.
It's business. I mean, we're all in business, so let's, call it what it is. That's not illegal yet, but I mean, is it the best relationship builder for the long run? No. Yeah. And that's the thing. That's the big confusing component of this, is that this does not help support things moving forward. So I want to hit, I'm going to skip over my next story for a minute, and I want to hit this Old Dominion news here that Todd Maiden wrote. Old Dominion sees August impact from Yellow's shutdown. LTL, obviously one of my favorite things to discuss here. So I get a lot of questions about the LTL sector, and is Yellow's situation, can you say that that's actually a part of the LTL sector? Or is this unique to Yellow? Mm-hmm. And Old Dominion kind of showing here that it is really unique to Yellow. A lot of freight is coming out of that network and moving into other providers. Old Dominion was sort of the last one to the table here to get some of this demand, because Yellow was a discount LTL carrier, right. Like it or not, at the end of their term. Old Dominion is premium. You go to Old Dominion, they have the service, et cetera. So Old Dominion's tonnage was down 6% year over year, but it was much better than it was in the previous months. So Wednesday's release said shipments were up 6% sequentially in August to 50,000 per day, after averaging about 40,000 shipments in the first 7 months of the year.
So definitely an impact being felt there.
Yeah, they're getting some shipments, and of course, industrial freight accounts for 2/3 of total volume. So the industrial sector, you mentioned it.
Yeah,
ISM's not in a great spot.
No, not in a great spot. Yeah. And I think, of course, there's still tons of backlogs being worked through in some aspects. Mm-hmm. Although we did see factory orders dip down over 2% in the latest report. I think that's another one that's going to be measured in millions of dollars. I have to double check that one. But we're looking at what's going on. It's like we mentioned before, it's just so segmented in what's doing well within manufacturing and what's really in the tanks right now. Just anecdotal, one of the things I hear from drivers from time to time, especially my cousin, planes are doing pretty well, but that's such a volatile segment. So you see non-defense aircraft. That's something that can spike up, have a huge swing upwards, then a huge swing downwards, depending on where orders are for that one. So that can have also a big impact as well, but it's just such an up and down, as the title of the show.
Yeah, and the volatility that it's creating in the LTL segment is real. And of course, if you are a shipper shipping LTL, you should make sure you have the right measurements on your freight instead of getting hit with those nasty W&R reweigh and inspection fees. Good grief. You can definitely use somebody like Cubiscan, where we provide dimensioning, weighing, and integrated systems that increase efficiency and profitability. A WMS, ERP, TMS, or IMS is only as good as the data that powers it. We help you collect accurate product, parcel, and pallet data that you can use to power the software systems within your warehouses, distribution centers, and cross docks.
This is essential.
Yeah, I mean, the idea of knowing what you're shipping. I mean, when I was in pricing, pricing is based off density.
Yeah.
It's not, NMFC codes, you got to have them. They're there, and they account for some of it, but a lot of the direction is moving towards kind of lining up the dimensions with the pricing instead of going through, this classification process.
Right.
And so, a lot of it's going to be a bigger issue moving forward, and technology obviously is assisting with making sure that's a little bit more clear.
But
last story.
This also kind of feeds into some aspects of yellow as well.
Yeah, August Class 8 truck orders reach highest levels since February. Oh, everything's all fine, right?
Yeah, Zach, we're in the clear now.
We're in the clear. I think Craig wrote an article earlier in the year talking about watch out for watching truck order data as a sign that the market is improving. I think February might have been a low point for sure, but if you read the article, it's still down significantly. Preliminary net Class 8 truck orders reached 19,000 units in August, 9% below a year ago, but they were the highest in 6 months. So this is kind of mirroring the freight market data. Yeah. We did sort of bottom demand-wise in February, and we've been trending higher. And I know we're kind of in this seasonal, they call it a slow period, although I think the record orders for all time happened in August.
Yeah.
COVID environment, broke a lot of things. But I think my takeaway here is that this is not really news. Like, we're still coming out of this COVID environment where people held equipment longer than ever. Used truck prices are tanking, and Alan goes on to talk about it. And ACT really goes on to talk about how we're still seeing capacity. People are entering the market, strangely, but capacity's exiting faster than it's entering at this point.
And it's like this interchange as well. So owner-operators deciding to also go drive for a company for the time being, and kind of make use of some of those contract rates that are a little bit more elevated compared to the spot rate. And then also kind of it's interesting to see how California is going to play a role into this.
Yeah, California, of course, it's, they're going to have cleaner. The regulations are moving towards cleaner equipment. The impact of orders being pulled ahead to avoid higher priced and cleaner diesel trucks for California is uncertain. So there may be a little bit of that pull forward. We're going to order some, new trucks for California, et cetera, to make sure we're ahead of that. I think that kicks off into next year. Or no, 2 years.
Is that
2 years.
The CARB?
Yeah, there's a new regulation in play. We need to do a little research on that, because that does definitely have an impact there in the nation's second largest freight outbound state now, second to Texas.
Wow. Texas coming up. We had Noe Mahoney on not too long ago with some words from Texas. A lot of folks in Texas expecting that they're going to overtake California in terms of overall, state GDP within the next decade or so. I think they would actually kind of have to add the state of Florida onto them, essentially. But with all the activity really popping up in Mexico, that could definitely be feasible. But when we're looking at, I think, what's going on within California, and of course, that's going to be a big topic of concern.
Freight demand's booming right now.
You're in luck, because we're going to be doing a net zero carbon summit. Just a little plug here, live.freightwaves.com. You can go over there, get registered. That's going to be right around the corner. So if you are concerned or want to know more about anything that's going on around net zero carbon, what's going on with emissions, anything like that, definitely tune in for that one. So that is going to be a great place to get a little bit of knowledge around that as well.
I think the net zero carbon stuff kind of gets, sometimes people are dismissive of it in terms of like how, it's okay. I get it. You're hippie, and that's but that's like, you have to be cognizant of that. Like,
Yeah.
not just because regulations are moving that direction. California is kind of the leader there. But I think as a business unit, I think if you really look at the big picture here, you're talking about sustainable business practices, not just sustainable environmental issues. If the environment is destroyed, it's like a virus.
Yeah.
An imperfect virus kills its host.
Right.
We are, not to get all matrixy here, but if you destroy the environment you're operating in, you die with it. And that's kind of a good business.
Almost like a union.
Right. Yeah.
But also, one of the other big things is that even if you want to do business, a lot of folks aren't going to be able to do business with you if you don't meet certain expectations. So also another thing that's good for the bottom line as well.
Yeah, for sure. So, I mean, don't look at that. I think the way that it's been packaged has been a little too politicized in recent years. And you got to look at it from a more sustainable business practice outlook than just simply like saving the planet.
Yeah,
we should. I want to have a planet.
Drink more water as well.
Right.
Thank you guys for tuning in.
Yeah. Have a great week.